If you're in Michigan, you notice that the car insurance has slowly been creeping up. And for some people and some companies, it's been rapidly creeping up. There's a few changes that the state in general has implemented that have caused the prices to go up. And there's a few changes that insurance companies have implemented based on their risk. Let's dive in and go over what specifically those changes are and how you can combat them to see if there's any way that you can save extra on your car insurance. First and foremost, let's talk about the part we can't control. Unfortunately, the state of Michigan has something called the MCCA fee. And for some people, it's fortunate because it's helped a lot of people. Don't get me wrong, it's a medical coverage, the Michigan Catastrophic Claims Association. We see it on our policy as something called personal injury protection. It's basically medical. The MCCA is like the fund that it goes into. It's a nonprofit, and it's how it pays for the medical if somebody gets injured in a car accident. What that does is we have a fee that we've always paid, except for the last couple of years, we haven't had to pay a fee at all because Michigan has allowed us to opt out of it depending if you're on Medicare, or we have different options if we don't have that. If you're on Medicaid, you can get a lower coverage, or you can just lower it in general. So if you don't want that unlimited package that you had to have the last 10 years, you had options to lower the cost of your insurance. Coincidentally, we all got money back a few years back, and it was $400 per car, and it was great. Amazing, thank you. And that didn't last very long. Now they're actually showing what's called a recoupment fee, and that's essentially paying back part of the money they gave us. The easiest way to think about it is there's a fund of money. The money has to have a certain amount in it. Once it hits a certain level, I think it's 4 billion, 2 billion or 4 billion. Anyways, a lot. It has to be paid back to the people that paid into it. So there's kind of a refund if we go over the budget. Essentially, if nobody gets hurt, then that's a good thing. We all get money back. It never ends up that way because a lot of people get hurt, and that's unfortunate. That's why that fund's there, is to protect ourselves. In that scenario, it did hit that cap, and they paid us back the money. $400 each car came back to the policyholders, and we were happy. Since then, they made a couple mistakes. So when they changed all those laws to where you can pick lower levels, they forgot that they changed, or at least they meant to change the law where people couldn't claim previous medical. In all realness, it hurt people that are already on a certain program. That got fixed. There was lawyers involved. Long story short, it's fixed. That's part of the recoupment now because we gave money back that we had to take back, and now the state of Michigan is paying that back. Guess where it comes from? You and me, the drivers. You're seeing it already. If you haven't had a renewal in the year of 2023 from July to July of 2024, you're going to see a recoupment fee of $48. That's not what we're talking about. That recoupment fee has gone up since last year to this year, but that fee itself is going up an additional $20 coming up in the next several months to come. So anytime from July of 2024 to the end of June of 2025, that fee is going to be $20 additional. That's for people that don't carry the unlimited medical. That's if you're opting out and you don't have any of the medical. The people that do have it actually have a larger fee. So it was $48 per car for those plus the MCCA fee, because if you kept the unlimited medical, you're still paying into that bucket. You're protecting yourself. I personally carry the unlimited because it does make sense. I've got kids. If I get in an accident, I don't want the medical not to be covered. The best medical is to have unlimited. Last year, it was $74 instead of $48 per car for those that had the unlimited coverage. And I want to correct that because that's in addition. So the 48 is still the recoupment. The 74 is what you had to pay already. So you have 74 plus the 48. I think it's like $122 per vehicle that you're paying if you carry that personal injury protection at the unlimited package. For those that don't carry that, you're not paying the 70 some odd dollars, you're just paying the $48 recoupment. On a positive note, that has actually gone down. So the state has actually lowered the amount because it's all based on who pays in. So the recoupment is still the recoupment. They're still trying to pay back the old money, but that MCCA fee changes every year because it's based on who has medical claims. In this scenario, it went down $4. Woohoo! We're getting money back. No, we're actually not paying as much. But so instead of $74, it's $70 for those going forward if you have the unlimited plus the $20 recoupment. So you're seeing about a $90 change. Now, I know there's an asterisk if you look it up on the MCCA website. I think there's like mcca.com or something. And it differs a little bit based on the type of vehicle. So we're just talking about your standard auto policy. Motorcycles pay differently versus campers and RVs. So the per vehicle is per vehicle on a standard personal auto policy. For your commercial policies, it's different, but it's the same price. So It's not technically different. It can be different. It's just not different this year. Motorcycles, I know it just says different, but the same price again. And then historical vehicles, I think you're only paying $14 for that. So the historical vehicles, because there's so few driven, so few accidents, so few claims, they're not really paying as much into that fund. So unfortunately, that's the part of Michigan. There's some positive and negatives there that's changing our price on our policies, but companies are still having an issue with their claims. And I get it. Insurance is meant to make money, and they all have a ton of money, and they really honestly do. The problem that they're running into is it's a year-to-year model. So every year they take their profits and invest it and everything there, and legally they have to have a certain amount put aside for claim. That resets, and every year they either show a profit or loss, and they've been losing the last few years. Some companies have shown some small profits, and going forward, some companies are showing bigger profits, but unfortunately the last few years, we haven't had some major changes in the industry. For auto insurance, you're seeing about a 20 to 30% increase across the board. Some companies are only going up 8%. I've seen one company go 4%, but they have planned future increases. So don't necessarily accept the 4 and say, okay, that's just what they're doing. They probably have 4 now and 6 later and maybe 8 later. And I've seen one company that has 4 rate increases in the last year. The weird part is you'd think shame on them, but they're actually one of the lower increased amount. So even though there are many rate increases, a lot of companies are trying to play it close to the chest to where they don't outsource the cost to you in one lump sum. Other companies are just saying, let's just do it all now. Let's get it out of the way. Some people will leave us, unfortunately, and go with the next cheapest option, and it's going to be sad. But if we do it now and all these other companies start to bounce up, we may gain those customers back. And if we've already gone up and everybody starts going up, strategically, it makes sense for us to start getting those customers as they're being quoted. So we're actually going to gain more customers by just doing one lump sum. That's what you're seeing in 2024, possibly might creep into 2025 as well. Mark, what do I do then? Because I can't afford 29.9, 10, 50%, whatever the increase is. There are a few options. So the first option is the one you'll see online, is to shop around. If you're getting a large increase, if you're happy with the company you're with and you like the agent, then shop with the agent you have now. If you're looking for a new agent or you just don't know who to work with, I'll put a link in the description below where you can work with our team. Here in Valor, we try to focus on getting the right customers, the right fits, and that helps get the right price for what we need to get you insured for. On top of it, we do follow up at renewal, so that way if there are some major changes, we're going to be the first ones, hopefully, to tell you. Now, the insurance companies do technically tell you first, but I find that most people don't see it or at least look at it until an agent actually gets involved. That's one of the ways that Valor is a lot better than most companies, not to toot our own horns, but there you go. We do focus heavily on that experience that you have, not just having another insurance company. The other pieces that you should look at is, where's your home insurance? I have a lot of customers in the past that were just new and they're just putting their foot out there and they like the price on the auto, so then they might switch their auto, but they didn't want to switch their home because some reason or another, they just wanted to keep them separate. Well, combining those can combat that almost completely, because most companies give a 20 to up to 30% discount on the home and auto. For those of you that do renters, that's the same thing. They usually give the same discount if you rent and pay for renter's insurance. Now, the point of getting renter's insurance isn't to get it cheaper, but in most cases, it is cheaper if you buy renter's insurance with the auto just because of the cost. Clearly, if you're paying less than $100 a month or you're under 100 and some odd dollars, then you're probably not going to save that much, but it's good to have both policies in either scenario. The other part that you can do is to look at your policy and see what discounts might I be missing. A lot of times there's longevity discount. You don't really control that. If you've been with a company for X amount of years, they give you a discount in most cases. You have claims-free discounts. Obviously, if you file a claim, there's nothing you can do there. If you have a claim that you're not aware of that shouldn't be yours, then you can also dispute that as well. That's listed on your declarations page to where they're showing why the rate is what it is based on your policy. The other thing is to review changes. I have a lot of customers that when their policy renews, if they don't sign their documents every renewal, that's something Michigan put in place. If you're not signing them and you carry lower personal injury protection, then it will go back to the unlimited if you don't re-sign them every single term. That's usually a few $100s, and I have had a few customers where we've gone back and gotten it fixed, but it's up to the insurance company if they want to do that. most of them are going to play well with you there, but once it goes a certain amount of time, if you haven't caught it, then your price is stuck at that rate until the next renewal. The last two major ways that you can combat that increase is that you can do something called usage-based insurance, which is telematics. It's where someone watches you drive and you're proving that you're a good driver, but the discount is huge for that. Yeah, they're going to watch you drive for 90 days or whatever the case is, and you have to be okay with that. If you're okay with that, we did it ourselves, saved us like $300 and some odd on our renewal. So that's an option that you can do if you have the right company that can give you that discount as well. And the last way is to pay in full. If you have the ability, I know tax time's coming up or whatever the case is, if you have I don't want to say credit card because you're paying percentages on that, but sometimes it is cheaper. If you have a way to pay the bill in full, most to almost every company will give you a discount for doing that in one lump sum. Whether it's 6 months or 12 months, it can be anywhere from $100 to $800 off your policy, depending on how many cars, drivers, and what type of risk you have. So your next step at this point is to do one of two things. If you're confused about that personal injury protection, you're not quite sure all of the details, there are actually 5, technically 6 levels that you can choose from. I'll link our personal injury protection video that goes over the updates that they did this year. If you're trying to find out what coverages you should carry and just what's the next best step or discounts, I'll link our car insurance video here as well that's going to go into more depth. Hopefully this was helpful. Don't forget to thumbs up, like, subscribe, all of the fun stuff. I'm Mark with Valor Insurance. We'll see you soon.